Bitcoin is moving here to the downside, and we have to talk about some crucial levels that we have to watch today. And I'm gonna show you the actual reason why Bitcoin is moving to the downside. And if you think that is interesting, then you should definitely stick around here. Make sure that you're subscribed to the channel, like this video, and also activate the notification so that you will never miss out on these important updates. And now let's directly get into it. So here on Reuters.com came some news out today that Evergrande, one of the biggest Chinese property development companies, real estate companies, had a setback in settling the debt that they have. So they are basically bankrupt, and that has a huge impact on the Chinese economy and also is having a ripple effect across the global economy because so many foreign investors were also invested in Evergrande. So now when we are reading the news here, Hong Kong Sydney today, another obstacle to embattled developer China Evergrande Group, long-pending debt restructuring plan, rekindled fears for China's crisis-hit property sector on Monday, sparking a stock sell-off. Developer China Oceanwide Holdings added to investor concerns in an exchange filing which said that a Bermuda court had ordered its winding up and appointed joint professional liquidators. The latest development reversed a brief respite for China's property sector, which accounts for roughly a quarter of its economy, off the back of Beijing's support measures and two other major developers forging debt deals with their creditors. Evergrande, the world's most in-depth developer and poster child of China's property sector crisis, has been seeking creditor approval for an offshore debt restructuring after it defaulted in 2021. So you see here, they have defaulted 2 years ago already on the debt, and a quarter of the Chinese economy is depending on that developer. They are that big, which is insane. So, and when a stock sell-off happened today, it caused ripple effects across all markets and had also an impact on Bitcoin. So now when we go to the dollar index, the dollar index is breaking right now through this crucial key area of 105.6 points, which we did not want to see be broken, and now we're actually breaking it because of that news that came out this morning. That means we have a strengthening dollar, and that means all risk on assets are selling off. And that's basically one of the reasons why Bitcoin is going down right now. And it has, of course, also something to do with some technical levels that I will get into just in a moment. So now I still hope that by the end of the day, we're going to see a rejection from that level and go under 105.6 points again. But if we don't see that by maximum tomorrow, with tomorrow's candle coming back down, and we see continuation here to the upside, then we should get ready for a move to 107.6 points. And that will be really bad news for Bitcoin and crypto overall. So now when we're having here a look on Bitcoin, I'm changing right now slightly my strategy here when it comes in general to charting on Bitcoin, because I see more and more institutional players coming into the market, and then you have to also adjust your strategy to play the way that they are playing. And what they are playing is inefficiencies and imbalances and deviations. So it's a little bit different than how I was trading before, but I was kind of adverse in these fares already for quite a while, so it's not a big change for me to move over to that. So, and when I'm looking here on imbalances on these FVGs, which are fair value gaps, again, I want to explain it quick how they are created. If you have here a really quick move to the upside or to the downside, then you are creating an inefficiency in the order book, which is leaving a void in the order book, and that void has to be filled at some point again to balance out the order book. So if you have an inefficiency move to the upside and creating a void for the order book by going up, because the price moved really quickly up, then the price has to come back down in the same fashion that it went up to fill the void that was created in the order book. So, and that's something that you see, for example, here here, and here. So, and now I believe the imbalance that is targeted right now to be filled is that one here. Because you see, we had a really quick move here to the upside on the 4-hourly chart. And then we kind of chopped upwards here. We were not creating any other imbalances here. But now it looks like, because we are so close to it, that this is the imbalance that is being targeted. And I'm going to show you other signs why I believe that that is the next level from where we can potentially take a long. Now, when I move here to the daily chart, the imbalance that is targeted is actually in that green area down here at $25,200. So now what I want to show you is that we have, so here, these candles are targeted, in my opinion, on that move here to the downside, and then we have the same inefficiency still above us that we never came back to yet, and that is all the way up here. So that is one that is targeted, but also here this one could be targeted on the way back up. So how I'm going to play this is that I wait until price action comes here into that imbalances, into this inefficiency. And from there, I'm going to long it to the upside into roughly $28,000. I'm going to take my profit there. So that's my game plan for now. I want to see how price reacts when we get up here. If I see that it's ripping through it, then I will continue to trade this and look for either a re-entry point, or when I see that we get close to that level, I will just raise my stop loss to a reasonable level and let this play out to see if we continue to move higher into that inefficiency here, or if we are getting rejected at some point on the way up and I get stopped out in profit. That is my plan here for the daily chart so far. But I really see here in the charts right now that price will potentially go lower to $25,200 because of the confluence that I see in the chart with the imbalance, with liquidity underlying at this level, and also the inefficiency in the chart here itself. And when we're looking here at the 1 hourly chart, we can also clearly see that liquidation levels are also on the way down, playing a major role here. So, and what do I mean by that? So here I have an indicator. It is actually an indicator that a friend of mine developed. It's MDX Algo liquidation levels. So, and the yellow lines are 100x leverage stop losses. And the lighter, the darker one is 50x. So now what market makers are doing is they are going down, liquidating 100x leverage positions and 50x leverage positions, then turn it around and do the same to the upside. Again, 50x leverage, 100x leverage, people that went short here. That's how market makers playing this market. And that's why it's so important that we understand now how institutional players playing in this market, especially with ETFs coming, where more institutional players will come into the market. And if you don't know how to play along with them, you will get left behind and will most likely lose all your money. And that's why we have to switch gears here and start to look at the charts the way that a Wall Street banker would actually look at the charts. So, and that's why I want you guys to be prepared for that moment when they are coming into the market, and that you actually understand how they are playing and that you will have a chance to actually play along with them. And guys, don't forget, if you want to trade with me together in this volatile market, then do this on a BYBIT. You still get $30,000 absolutely for free if you use here my specific link. And of course, if you know already how to trade and you're a good trader, you should then sign up on Bitget and join my team AMC Winners for the upcoming competition on Bitget, which is starting in 5 days. So you have 5 more days to sign up there and to join my team. Just go to futures competition, then search for team and search for AMC Winners. And if you don't know how to trade, then you should go to my homepage AMCrypto.us and sign up for one of my courses and mentorship programs, where I will teach you everything what you need to know for the next upcoming bull run so that you are prepared and know how to take advantage of that. It's too late if you do it in the bull run. You have to do it in the next, let's say, 2 to 6 months, because also my program will take a couple of months to complete, but you can have it done in time to be ready still for the next bull market. On this daily chart, I'm still watching closely underlying big liquidity levels, demand areas for the Bitcoin price. And we can here now absolutely beautifully see that the $26,837 level was a level that bears were targeting for shorts to move here back into these zones that have underlying liquidity and demand area. So, and this area here is from $24,700 all the way up to $25,200 approximately, and that is the area that I'm looking at right now for potential long positions, and you should do the same. Maybe tomorrow I'm gonna talk a little bit about altcoins, and don't forget, if you sign up for the competition, you will be added to a special Discord server that I create where I'm going to trade on a daily basis. I will have more live streams where I'm gonna trade live with you for the competition. So definitely don't forget to take advantage of that. And yeah, that's basically already for today's episode. Don't forget, smash up the like button, hit the subscribe button, hit the notification bell, and I'll see you then again tomorrow.